video, I'm going to do some of the basics of life insurance. This video is mostly focused on term life insurance. I'm going to go over the difference between term and whole life and approximate amount of money and years that you would want a term life policy. A lot of the teachers that I talk to only have the term life policy that the school district provides, and I think it's a very important source of income if someone else ever passes away. So the main goal of term life insurance is to replace your income at death to loved ones, whether it's a spouse, children, etc. So in general, you're going to have 10 times your annual income for a term life policy. That's assuming you have at least a wife or husband. And if you have kids, you might want to make that a little bit higher. Term life policies are not very expensive at all. About 7 years ago, I bought a 30-year term life policy for $500,000, and I just paid my annual premium. It was $321 for the year. So that's about $25 a month or so. With that, in the off case that I would pass, my wife would be getting the full $400,000. That's tax-free. And then she could help replace a lot of the income that I wouldn't be having if I wasn't here anymore. So what you do is take your annual salary, add an extra zero to it, and then get at least 20-year term, I think is recommended if you were within like 40 years old or so. If you're younger, feel free to try to get a longer one. I happen to get a 30-year term because I just got married at the time, and I didn't have any kids yet, but we were planning on having kids. So by the time we had kids and by the time they're 18 or so and they're in college, then that should be adequate enough time for them to hopefully be on their own and live on their own expenses and whatnot. So 20-year and 30-year term when I was younger in early 30s, it was very affordable at the time. If I got a same 30-year policy at 38, which I am now, it would be quite a bit more, although not dramatically more. Okay, what I would recommend you do is to look at term life insurance quotes. You get quotes for free. I happen to get my quote through Geico because I own my car insurance at the time. I have my homeowner's insurance, and you get a discount for doing bundles like that. The actual life insurance quote I don't think was actually discounted at all, but it was just more convenient at that regard. And Geico actually resources it out to a lot of different companies. So it's something to think about. If you have, say, State Farm insurance, I know if they do home and auto and life, you get a discount as well by bundling them all together. Okay. Here's a website from Dave Ramsey. I recommend his policy on term life versus whole life insurance. So some of the general things here. What's the difference? Term life insurance provides life insurance coverage for a specific amount of time. If you or your spouse pass away at any time during the term, in 20 or 30 years usually, the beneficiaries, kids, spouse, will receive that payout. They are much more affordable than whole life insurance. They do not have any cash value until you or your spouse passes away. It's actually not worth anything if you survive past your term policy. By the time you say you have a 30-year term policy, ideally you'll be saving for retirement and you wouldn't need insurance at that point anyway. Whole life insurance is a lot more expensive because you do get a cash value and it does last throughout your lifetime. The problem is it's really, really expensive. We're talking almost 7 to 8 times more money to get the same amount of policy, depending on your age. Now, it is designed to build cash value. Cash value is something that could be useful in a little bit more extreme circumstances, but I think you just keep it simple and invest in term life insurance and invest the difference it would be between the term and whole life. Okay. Here's a cost comparison. Let's say you have $100 a month to spend and you're 30 years old and you want to get $125,000 insurance. It would be about $100 per month policy to do that. If you get a 20-year term, we're looking at only $7 a month instead of $100. If you take that extra $93 and invest it into some dividend or growth stock mutual funds and companies, you should be able to make a better difference. One of the main reasons is term life policies don't give big commissions. I was a life insurance salesman a long time ago, and we would try to get variable universal life insurance because whatever the premium was, we got an immediate, well, it was almost 10% or so of whatever their annual premium is. The $93 a month difference disappears in commissions and expenses for the first 3 years. So the first 3 years, you are all negative in that money. Imagine taking $93 a month and investing it. Money Chimps is my favorite online calculator. $93 a month, 12 months in the year. Looking at $1,116 a year. We'll do 3 years to grow and 10% interest rate. You're losing out on $4,000 right off the top. Again, a lot of that money goes into the commissions of the life insurance agent. After that, you're only averaging about a 1.5% return per year for the whole life policy. Right now, I have a Capital One savings account getting 2% return. So literally just saving money in my savings account gets a higher return than what the life insurance is. Now, let's say you pass away. The only benefit you receive is the face value of the policy, not the cash value in it. The cash value, again, can be useful in certain cases if you want to buy certain goods and services, but then you even have to take out a loan for it and lose even more money. So here's a chart, 20 years with term life insurance. If your annual premium was $5,618 compared to $242 in a term policy, the whole life cash value is only $147,000 from $120. If you invest that money in 20 years, it's $307,000. You're more than doubling your money in a term policy compared to whole life. And I think a term policy is actually safer because you're investing the other money. If you actually needed that extra $93, you could easily take it out as well. Okay. How much do you need? We recommend 10 to 12 times your annual income. Might be better to go lean towards the higher side because your income ideally will be increasing over time. So if you do 12 times and then you make an increase in your salary, you might be at 10 times a little bit later on. Okay. How long do you need it? Again, 20 to 30 years. If you're 20 years old, so let's say you're 30 years old and you get a 20-year policy, you might have a 22-year-old college grad at that point, right? Ideally, you'll be debt-free at that point, and your kids won't need that money anymore, right? Don't wait until you need life insurance to get it. If you're a single person and no kids, no wife, not many responsibilities, I think it's okay to not have a term life policy because you're not owing anyone anything and no one's depending on your income. If you do get married, and once I got married, within a few months afterwards, I looked for term life insurance, and my wife did as well, because we obviously need to replace that income if one of us passes, right? So again, if you're married and or have a kid, you should be making sure you have at least 10 times your annual salary in a term life policy.